Hi everyone, welcome back to Be Rich. Today we have Sashwath back in studio. He happens to drop in now and then, and today is one of those days which is not now, but it's then. So Sashwath, what do we have today?
Yeah. Today I want to talk about burgeoning government debts all around the world, especially post-COVID, where governments loaded on much more onto their balance sheet, and it's a symptom which most developed countries are facing. And developing countries don't have the provision to be able to borrow so much, and they don't have the currency to be able to withstand burgeoning debt. So, coming to developed nations, which developed nations am I talking about? I'm talking about your European countries, which loaded up on debt during COVID times, post-COVID times, to engage in stimulus activity, and now they're raising interest rates slowly. Now, the problem of raising interest rates slowly is that they're also increasing their costs.
Correct.
So
Their own costs.
Yeah, their own costs, because they've done the deed, they've borrowed, and now they're jacking up interest rates, and they're increasing their own costs, and it's going to be a very
Painful time.
very painful time and a very sticky situation, because what has been certain over the past few centuries is that governments keep piling on more and more debt, especially so after we broke the link with the gold,
Yes.
as a reserve currency. And now that we don't have a peg to gold, which happened well before my lifetime and around when you were born.
Yeah, this is about the time I was born.
Yeah. So this peg breaking basically meant that governments could borrow willy-nilly. And how are they going to borrow willy-nilly? Well, it's very simple. You just elect the guy you want into the central bank, which the government has the jurisdiction to do so.
Correct.
And it is common courtesy that during tough times, when expenditure is unable to be met, the government just borrows more, and the RBI or the Federal Reserve or whichever other central bank steps in and prints some money and says, okay, I will tide over your short-term problems, just leave it to me. And this is a courtesy granted to any party. It doesn't matter which party comes into power. It's a courtesy which
To
is...
the government.
Yeah, to the government. So even if one party had put a guy into place, the next ruling party will come in and get the same courtesy from
We
that
saw
guy.
that in the US.
Yes.
Between George Bush to Barack Obama.
Yeah. And just as we saw with Biden reinstating Jerome Powell's term in Federal Bank of US. So this is something which happens all over the world. The US is now nearing 100% debt on its balance sheet. I think it might have crossed it if I'm not wrong. But 100% to GDP is what I meant to say.
Yes. I think we've crossed it.
I think they've crossed it, yeah, which is a very dangerous sign.
Yes.
And there was an entire talk about the debt ceiling and so on and so forth, and a big back and forth where it almost seemed as if they were willing to let the US default on their treasury bills, which wouldn't have happened. But there was talk about it, and there was a little market scare which happened. But all this is fine and dandy. Now we have debt which is mounted up. We have interest rates which are rising. We have inflation which is sort of maybe showing signs of taming. But inflation, so this is something which is interesting. Inflation is actually the best friend of debt. So if you are someone who's taken on debt, inflation is your best friend, because your debt now becomes easier to pay off. Your real interest rate goes down. And anyway, your interest rate was at 0%, your real interest rate would have been in the negatives, about -6, -7% in the US. And
but you need to explain the nuance of that.
yes, so real interest rates...
Explain how it is a benefit if you have debt.
Yeah, so suppose...
In very simple terms.
Yes.
So people like me and my simple audience can understand.
So suppose if you took on a debt of 100 rupees and your salary was 20 rupees. Now, the next day, suppose inflation rate is 8% over the year. So your salary now goes up by 8%, but your debt is fixed. In paper, it is written saying that only 100 rupees
is owed.
So that is something which is not going to move up. But your salary is going to move up, and yes, your expenses might also move up, but that's okay, because you'll still have more money to be able to ration to debt. 8% more, or how much ever the inflation rate is. So this is wonderful news for you. And if you're a trader who engages in selling commodities, or if you're even a salary worker, but let's talk about the businessman. Your products are now selling for much higher of a price. However, your debt still remains the same. Therefore, the constant interest rate you're paying on your debt also remains the same. So the burden of your debt comes down. The real burden comes down. But now, inflation is going down. So that best friend, that tailwind. So if any of you are interested in cycling or running, you'll always enjoy the wind which is going from behind you, because it's reducing the amount of effort you have to put in to the action. But now this tailwind, which was inflation, has stopped. And if it becomes a deflation during a recession, it's going to become a headwind. So governments are basically facing this. And why deflation is a headwind? Because the value of your debt goes up. Because the 100 rupees is going to be the same, but you're not going to be earning 20 rupees, you're going to be earning 15 rupees.
Correct.
So now this is something counterintuitive and which you don't really want. So the government has secretly been inflating, and it's been a wonderful opportunity for the government to be able to manage its debt. And post World War II, the US got out of their debt trap only by doing this. By what do I mean by this? I meant inflating their currency beyond no return. And because they were the dollar reserve currency,
Correct.
and they were helping multiple other countries in the world come back from rubble, especially Japan, especially UK, Germany, France.
All the engines of the world economy now.
All the engines of the world. The old order basically was wiped out, and the US stepped in, and no one had any option but to take the US dollar,
Okay.
no matter how much they were
Because they were
inflating.
not affected by the war.
Yes.
Their infrastructure was in place.
Yes, and Stalin was conducting a completely different operation.
He was closing his country down.
Yes. So the only global dominant power which they could rely on was the US, and of course their economy boomed. So there's a dual pronged nature in this. The second part is growth. Growth is something which you need to tide out debt. If you have growth, then you have inflation, and if you have growth, your revenues are increasing well above the interest rate. If your growth is well above the interest rate, like how it was post World War II, when USA was engaging in what was truly nation building. Now we have many people talking about nation building, but if you actually look at nation building, you should look at the US post World War II. That is true nation building. So when you do look at or you can even look at India's example post the British occupation, when once we were sucked out of all resources which we did have, you should have the economic growth which it had, especially post liberalization. That's something that is called nation building. And if you look at the growth rate in the US, they had about 5 to 6% on average in terms of their growth. And this is something which the US can't expect anymore. And this is something which no developed country is going to expect, unless lest you have an AI boom, which is going to propel growth in that way. So if you don't have growth, if you don't have inflation, but you have higher interest rates, what ends up happening is then you have to engage in fiscal restraint. You have to be ascetic in the way you consume. Prudent, yes. I would go even further and say ascetic, where you have to look like one of those Himalayan saints who have their rib cages exposed, because that's how careful you have to be with your expenditure.
From full gluttony, we have to go to full starvation. Yes.
Yeah, and that's something which is not going to happen anytime soon. But we did see this after the Napoleonic War, when France and Britain duked it out, and they had enormous debt piled up. After Napoleon's toll on Europe, what ended up happening was we had the Victorian ideals of less expenditure, which was a big deal back then. But now, under a democracy, under promises of pensions, I find it very difficult. Yes, our government has been trying. They've been trying to phase out pension schemes. They've been done this with the army. They've done this with government pension jobs. But it's not something which people will let go of easily.
It's not palatable.
It's not palatable, and neither is it very politically favoring. And
It's political suicide.
Yeah, it's political suicide. And considering that you have an election in 2024, at least in India, it's not going to happen anytime soon.
No.
And even Biden is looking at re-election. So
Correct.
That's not something Biden, especially being left-leaning, is going to look at to cut social spending.
No.
So what you basically have is sort of a catch-22, where you don't have growth, you don't have inflation. I mean, you're trying to cut down on inflation. So now Biden has basically said, Jerome Powell, this is your problem. You deal with this. And in our land, it's Shaktikanta Das's problem, added on to the RBI Trilemma. I mean, I really truly sympathize with those who manage central banks all around the world. It's really a predicament to be in.
Yes. Nobody likes the doctor when the doctor gives a prognosis and says, this is the medicine you have to take.
Yeah.
We like the doctor as long as the doctor says everything is hunky-dory, carry on. But the minute he looks at your results and says, okay, it's time you get on a diet. No, how dare you say this to me? No, but it's for your own good. Long term, you'll get better, you know. You will reduce your risk of any heart disease. No, how dare you say I quit smoking and quit drinking.
Yeah.
Why lifestyle change? You don't know nothing, you're not a doctor. Well, Shashwath has explained this very well, I would say. How debt can destroy civilizations, destroy empires, and even destroy countries. All over Africa, you see this happening. That's why the Africans are not too happy about this BRICS coming and BRICS expansion. They are very cautious of all this because they have had a long history with this. It's going to be some interesting times the next couple of years to see how developed countries and developing countries deal with this debt, which is all in everybody's balance sheet. Till we figure this out, I think we're in for some seriously tough times.
And one other route which I didn't think worth mentioning was increasing taxes. I don't think that's happening anytime soon.
Not with election cycles.
Yes.
Not in the US, not in India.
Yeah.
And if not in the US and India, I don't see it happening anywhere else.
Yeah.
Anyway, this was an interesting conversation. Shashwath is in Chennai for a few days, so I'm going to catch him every day and try to get some videos out with him. So thank you for joining us today. I hope you found this video informative and entertaining as always. Do subscribe to our channel and turn on the bell notification icon. And I'll see you in the next one.
Thank you.
After the event in Bangalore, my team has decided that we should visit my ex-home, Saudi Arabia. We were there recently but visited only Dammam. The idea is to cover the other two major cities, Riyadh and Jeddah. On the 22nd of September, I'll be holding an event in Riyadh, and on 29th September, we will meet in Jeddah. Those who are desirous of meeting me both in Riyadh and Jeddah should contact the email ID given below and the WhatsApp number. My team would get back to you at the earliest. Once again, thank you for supporting. Be rich. It's a great privilege and honor that so many of you in thousands have subscribed to my channel and have supported me. I have written 2 books in English, The Alchemy of Money and Ordinary Stocks, Extraordinary Profits. These books are published by us and are ready. If you want to procure a copy, send us a message to the WhatsApp number given below and my team would respond to you. If you want an Amazon Kindle copy, you can click the link below. Finally, those who wish to consult with me can send a mail to berichenglish@gmail.com. Once again, I thank you for your support. If you like this video, press the subscribe button of my channel, hit the like button and turn on the bell notification.